Hello, this is Ronnie. I'm back here with a clip taken from a long video that I just finished to record for my subscribers. I'm leaving the option for my services at 50% off for the first year open, and I'll be providing further details after the clip ends. So if you're interested, please stay on. I'll be talking to you again at the end of the clip. I would like you also to read carefully the disclaimer that I'm going to put up now, so that it is clear to you before you go ahead and watch the video. This is just a standard thing. This is the chart of silver priced in US dollars, and it is evidently seeking to trace for us a fourth wave. The question is whether the fourth wave is over or not. And I tend to think that it's not over. I think that we have potentially as much as another week or maybe even two before the fourth wave is done, and then we will go for absolute extremely exciting impulse wave that will tower above 30 and will go and run for quite a few weeks. Okay, this is the general idea that silver is in a fourth wave on the daily, and I'm going to start breaking down here slowly. That's now the 4-hour scale, and the line that you want to have on your chart, because it is very important to understand. Yes, here the entire structure is right here. It is at 28.50. You've got to have a mark here at 28.50, because if it exceeds 28.50, that's why I put it in red, it is almost certainly telling you that in fact the fourth wave terminated. The fourth wave terminated. Wherever it terminated we can debate, but if it continues to tower above 28.50 and it runs, it tells you this is already the impulse wave. Okay, there is no coming back. It's very likely to continue straight ahead. However, as I've shown you, I think it was yesterday or the day before, I've shown you Kinross Gold, I've shown you the Philadelphia Gold and Silver Index, I've shown you also Pan American Silver Corporation. I've shown you several charts that are advocating strongly that in fact we haven't terminated with a D leg. Okay, and you see 3 times D here, and you say to them, what the hell is this? Well, what? And you see several times the E leg. Well, there is a reason for each one of them, and I'll walk through that with you. That's an A, that's a B, no question, no argument, that looks fine. Now, if it just rallies straight through, then there is a case for taking this interpretation. Okay, with this being an A, B, C, D, E nailed right here. That's going to be 1, 2, 3, 4, 5, 1, 2, and that's going to be 3. It's going to just absolutely fly through 28.50. Okay, if we get a day like let's say silver up $1.50, I think there is no discussion. No discussion. That would be the heart of the third wave. It's going to explode, and it's on its way to tower above 30. Okay. However, if we get some sort of struggle, it doesn't even go above this level that comes at 27, let's say just under 28, yeah, 27.97 or so, and in fact it drifts sideways. That should tell you that the D actually ended here. Okay, the D ended here, and we're going for prolongation, and the E will end somewhere here. Okay, the E almost certainly will continue to be further out here if it jumps above this level 28 and it doesn't exceed the critical level that we have 28.50. Yeah, it just pops its head, it takes the stops, but it's not strong enough to really give us a huge rally, and it's just going to go sideways. Now, make no mistake, it goes sideways here for about 3 to 5 days. That's fantastic buy. Yes, it's an excellent buy. Okay, so don't try to be too precise. It is a trading range that you want to focus on. You've got the floor at 26, which is obviously a critical level you must watch, and you've got the roof here at 28. It goes sideways here, it spends a few days here. That is the quiet before the storm. Okay, the storm is going to take it way above 30. There is one more alternative that I want to discuss here. What happens if it runs straight up? Monday, Tuesday, it just goes straight up. Well, the leg could have ended here. Meaning you could have an A, B, C that ended here. That is a D, and that's an ABC that terminated the E leg. So that's going to be just a straight third wave. Okay, so I hope this structure is clear to you. Here's the chart of gold. That is the weekly, and the first thing you see is that there is definite, genuine, strong support. With this upsloping support line here, you can see the bounce this week, and you can see the bounce the previous occasion here. What I would like to emphasize is that the chart of gold is definitely supporting the idea that we're in a fourth wave. In the case of silver, it's not terribly clear, but in the case of gold, there is no argument. I think there should be no argument. Okay, I'm very comfortable with this being 1, 2, that's 3, that's a fourth wave. And given that the second wave took about 3 weeks, you can see, we haven't been through what is the normal fourth wave time span. Normally, a fourth wave is longer than the second wave. So we have been through, let's say, 2.5 weeks here, 3 weeks. It doesn't look like it's ready to run much higher at this point in terms of the time scale, and also the price. You will see the pattern. It is definitely arguing for an extension of this sideways price action. So I'll be very comfortable with gold not doing much for the next week or even the next 2 weeks. But should it stay really under the critical level marked here in red and the floor that are marked by this line, and it's not doing much and it's going into a very quiet inside days like that, that's fantastic buy. That's fantastic buy. Okay, I am wrong, and the wave count will have to be modified potentially seriously only if it breaks through the floor right here. Okay, that will not necessarily turn the entire reading in gold into bearish. Yes, only on a break under 1680 or so, this black line, then there is scope for some bearish reading. I mean, on a bigger scale. But more shorter term here, if it breaks this level, it will alter my wave count definitely, and it will call for reassessment. Now we stay above the level right here at 1900, and we just do nothing. We just go around sideways. Perfect, absolutely perfect. That's an excellent buy for us. And let's go now to the daily, and we'll take a look step by step. So that's our third. That's an ABC, which is our A, ABC, which is our B, very complex ABCX, ABC, which gave us the C, and now the mess. Okay, so you need to have patience. Mr. Market is taking its time. That's perfectly okay. We should not try to rush the market. Yeah, anyhow, we can't really influence the market in any way, shape or form. We just have to accept Mr. Market is throwing at us and do our best in terms of interpretation. Okay, what we've got here is the 2-hour scale with our A, with our B, with our C. Okay, composed, as I said, with a complex A, B, C, X, A, B, C. Fine. It is stabilizing. It's pretty clear. It's pretty clear. It's stabilizing. We had an ABC and very violent reversal. Is it possible the D ended here? Yeah, sure. It's possible. Is it possible the D would end slightly higher? Of course possible. Yes, it's perfectly possible that the D will end here. However, should it exceed this level at 2016, then I think it will tell us that the D might have ended here, and E leg might have ended here, and in fact the fourth wave could be behind us. Either here or here is not going to make a huge difference, but you get the point. Running through the red line will be news, will force our hands to modify the wave count. Okay, right now I think that a rally above this level, in my opinion, will not lead to very much higher grounds here. I'm going to drill. Let's go to the 30-minute scale. There is an ABCDE, which you should be taken as either an A or 1, that's B or 2, and it is, in my opinion, fairly clear that if it does break without exceeding, or even if it slightly exceeds this level, that comes at 1977, and it dips after that and it goes through this level. This is a critical level, very short term for you to watch, 1944, 1945, let's say. Okay, you should have this line on your chart. It dips under this level. It's almost certainly telling you it's just going for further lateral movement. Yeah, further lateral movement as part of the fourth wave, and most likely this is going to be our E leg. Okay. Some details about my service currently at 50% off for first-time users. You need to go on my website, the homepage. It's right here. It's Wave Mastery, www.wavemastery.com. Yeah, wavemastery in one word.com. That takes you to the homepage. You can scroll down, look through some things that I've written here, some recommendations from past users and current users, and that is essentially the offer currently open only to first-time subscribers. Okay, so there is the daily service, daily videos that are preceded by a trial, so you can take the trial for 1 week, and at the end of that, if you're happy, you do nothing, you go on to the plan of half price. Essentially 79 presents half price of the normal price, and that will be good for 1 year. That means 12 payments of 79. If you want to watch just the weekend videos, then you go for this one, and it does give you access to the weekend videos, and I often also insert a video as a bonus midweek, just to keep you on track, to see a little bit you know, where things are moving, because sometimes 1 week of full price action is a lot, and the wave count can change, especially if you're a short-term trader. You really want to know what's happening. So that is essentially the situation. If you decide to go, for example, for the daily videos, you click here. It takes you to the page where it explains to you. You should read that. It explains to you what is covered, etc., etc. If you like what you read, you click here, subscribe. It takes you to PayPal, because my paying system is through PayPal, and you pay through PayPal. You can see you have the trial at $9.99. That's for the first 7 days. As I said, if you like what you see, do nothing. It just goes automatically. If you don't like, you can cancel. Or if you don't know how to cancel, or you have any doubt, you have any question, you can write to me, of course. Once you go through and you pay, you come back, PayPal will send you back to my website to fill in your profile details, choose your login, and once you do that, you will be led automatically to the page with the links to the various videos classified by date. If at any point in time in this process you have a problem, things are not going as I'm describing to you right now, all you have to do is just contact me and I'll help you out. That is essentially it. So you'll have 1 week to look at things. I would like to just spend a minute about the website itself. I have written here a few articles. Is this website for me? You can go through that one. Psychology and trading, trading and the arts, why join? Yes, each of these articles could perhaps help you to see how to relate to my website. but there is no substitute, in my opinion, to actually take a trial. You know, you take a trial, and I want to say another thing. You take a trial and you can't make up your mind. You want more time to think. Fine, I understand that. Then you cancel, but then you're not allowed to take another trial. Please, I want to be very clear about that. There are people who abuse this, and it's really not right. You're not allowed to take more than one trial, okay? A trial is a trial. But if you're interested, after you take a trial, you're interested to come back, you can still benefit from the low price for the next full year. But you have to write to me, and then I will send you a special link without a trial. And if you join, then you're going to go immediately onto the reduced price plan for 12 months. Okay? If you take another trial after you took already one, I am going to have to cancel that and refund you. And if you do that 2 or 3 times, I'm just going to blacklist you, because there are people who have been doing it, and I'm afraid this is really absolutely not right. This is subscribe here. Use subscription. Once you are logged in, you will see this one highlighting you daily service videos or weekend service videos. Yeah, it will show which one you really have the right to access. The daily service videos, to be very clear, they cover the weekend service videos. Okay, so you don't have to subscribe to both. The daily covers everything I do. The weekend, of course, is more selective. Now, I have here resources. There are chart galleries right here. Chart 1, 2, 3. There are plenty of charts here that give you an idea how I go about subdividing various market action here. There I covered a lot of markets, and you can see there is history here that could be very interesting for you to just go through. Let's see, platinum, for example. Yes, that's 1973 to 1978. If you click right on top where it shows you the hand, the chart opens up big. You can print it if you like. Here's an example of platinum, April 1980. 1, 2, 3, 4, 5, and then the huge correction that followed after that. So there is plenty for you, whichever market you're interested in, the financials, commodities, precious metals, etc. Okay, so that's chart galleries. Then useful links, as the name implies. Yes, recommended reading list. You have a long list of books here that I've read over the years that I found very interesting. Of course, I have many more books that I would like to add. It's just a question of time. I don't always have time to update this one. But the books that you find here did help me in the beginning, and still the information here is very valuable in these books. For example, Kroll. I don't know how many of you heard about Stanley Kroll. Stanley Kroll was a really imaginative fellow trader that wrote very well about his own trading and in trading in general. I learned a lot from these books. And of course, if you haven't heard about Reminiscence of a Stock Operator, you should get this book and read it. You will not regret. This is a book that most traders, I think, have come across and read. It is very interesting. And as you go down the list, you will see if there are things that are of interest to you. Of course, go ahead, get them. Some of them are even available online for free as a PDF. Check that. If you have questions about that, you can even contact me. Here's the contact us, and you put your name. Please make sure you give me the right email address. Message, simple maths, submit, I get it. You'll hear from me. I'm based in Belgium, so if you write to me from Australia or from the US and I'm having my rest, do not be surprised if I don't react quickly, okay? Normally within a day you will have a reply from me. I check my email fairly regularly. So that's about it. Hope to see you visiting my website. Hope to see you taking a trial. If you have any questions, again, don't hesitate. Get in touch with me, and wishing you a great trading week. Bye now.